Welcome to ForexTV.com. Today's Wednesday, June 25th. I'm Remy Hoogie for New York Forex Market Buzz. The US dollar is nearly flat on the session against the euro and higher against the yen in New York afternoon trade. And taking a quick look at the latest headlines from the CEP News Desk. NYMEX crude oil is down earlier by $5 per barrel after U.S. government reports showed crude oil supplies rose for the first time in 6 weeks. The decline has been supporting U.S. equities, and the EIA reported that there was an increase of 0.8 million barrels in supply last week. Aside from energy, markets are relatively quiet ahead of the Fed rate decision at 2:15 p.m. Eastern Time. Economists unanimously expect that the Fed won't change the key rate from 2%. And a U.S. government report also showed today that durable goods, excluding transportation, were down by 0.9% in May. The figure was relatively in line with expectations. But the figure was also somewhat misleading because the prior month's growth was downwardly revised to 1.9% from 2.5%. And the Commerce Department reported that new homes were sold at a seasonally adjusted annual rate of 512,000 units in May. That's down 2.5% from the April level. And the median price of a new home sold last month fell to $231,000, down 5.7% from a year ago. And this afternoon, I'm joined by Rhonda Staskow, Regional Director of FX for the Americas at Thomson Financial. Good afternoon, Rhonda.
Good afternoon.
Thanks for joining us on Fed Day. Well, as we await the Fed rate decision as well as the statement, the U.S. dollar has steadied against the euro. Earlier, euro dollar was briefly above 156, but has retreated. Now, while we all remain focused on the post-Fed decision, with focus on inflation and inflation expectations, and also given the latest comments from the ECB and Eurozone data, what is your forecast for euro dollar?
Well, I'm afraid if I'm looking over the next month or so, it's not very exciting because I do continue to think the euro is going to be in the same sort of range which we've seen since May. As you can tell, just by looking at a chart, the euro was able to pop up briefly above 158 in June when Trichet first indicated that there'd be a rate hike in July. So that is really well and truly priced into the market. And yet, on the other side, recent gains on the euro to support hawkish comments from the ECB, including 5 members of the ECB warning about inflationary effects today, have been unable to take it anywhere near the 158. So I think the range trading we've seen for the last couple of months is probably going to continue for another month because nothing is expected from the Fed today. They are expected to give a nod to inflation, but it will be difficult to sound like they're going to raise rates anytime soon, given the data we've had out this week, some of which has been very weak, including the poor consumer confidence data that we've seen. And so the range that's held, where we've gotten buyers anywhere towards 153, 154, and sellers towards 157, 158, is likely to continue for the near term.
Well, Rhonda, as you mentioned, we do continue to see range-bound trading in the majors, but on the day, dollar-yen is well supported while euro-yen does remain at session highs. Now, once again, we will get clearer direction after today's Fed decision and statement, but what is your fundamental analysis for euro-yen as well as dollar-yen, and in the near term, what is your forecast?
Well, the interesting thing with dollar-yen and euro-yen and all the yen crosses is that they've all been in a big uptrend since March. It also coincides with the fact that the euro has basically been more or less range-bound since March. So the Japanese investors, at least while the euro-US is range-bound, have been more encouraged by the fact that the euro is not about to send a new trend for the dollar, so they can happily invest back into carry trades. And all this week, we've heard consistent reports of Japanese Toshin funds and Japanese Uridashi demand and Japanese foreign asset demand that has continued to underpin these crosses. So for euro-yen, at least in the short term, the market's targeting apparent barrier options, some as close as 168.75 and as high as 170. And for dollar-yen, there's supposed to be stops as well as sell orders starting from 108.50 all the way to 109. So I think in the near term, it's actually easier for the market to go after the stops, and that's probably going to drive a near-term direction higher on dollar-yen and euro-yen.
Well, Rhonda, now that we've covered the yen as well as the euro, very quickly, if we could take a look at the UK pound. Euro sterling continues to see choppy consolidation while cable is slightly lower on the day against the US currency. But what will remain the key drivers for the euro cable cross and also the cable against the dollar in the near term?
Well, I think because the euro continues to be in a range, the real driver is going to be the sterling performance. And if you look at sterling, while it keeps on having these bounces back, clearly sterling has been in downtrend since March, and economic data continues to be decidedly weak, and that there are real problems with the UK economy. So I do think selling on rallies is still preferred on cable, and I've said that for a while. I mean, the highs back in May were about 198.50 or so, but obviously we've got investors looking to lay out their sterling about 198 now. So I continue to sell on rallies, though for now anything under 194 is a good support. To that extent, I think euro sterling should go lower eventually because I think it's overpriced. But the problem is, as long as the UK economy continues to slow, that's going to offset attempts by euro sterling to head lower. So euro sterling is probably going to continue within the range that we've seen, which is bound by about 78 and 80 roughly.
Okay, Rhonda, last but not least, before we wrap it up, let's take a quick look at the dollar block currencies of the Aussie as well as the Kiwi. In today's session, we're seeing a broad decline in commodities, and given that we will be getting GDP figures out from New Zealand at the end of the week, and also taking into consideration the RBA next week, as well as their outlook going forward, fundamentally and technically, what is your strategy for both the Aussie and Kiwi against the US dollar as well as the yen?
Well, let's go to Aussie first against the U.S. dollar, and I think it's still in a range. No doubt there is some really positive data coming out from the iron ore negotiations that have seen 100% price rises for steel mills in both China and Japan emerge this week, which will really add to Australian resource revenue. Also, M&A deals have seemed very positive for the Aussie, with about $4 billion per month going into Australia as foreign companies try to buy Australian resource stock. That being said, on the other side, you clearly have a slowdown in the Australian economy. You have inflation problems, they're paying high oil prices, and you have the housing market starting to come off the boil as well. So I think that's leaving Aussie in a range where you still have buyers interested towards 93, but anytime you get towards 96.75, you're going to see some sellers on that currency. Though I have to say there's still a number of people believe that Aussie will go to parity. Now, looking at Aussie yen looks a lot more attractive. This goes back to what I said about the carry trades, and Aussie yen's been at the year's highs today. So I think that will probably continue to find support on dips, at least while the dollar, particularly the euro, is in a range. Kiwi is a completely different picture. As you mentioned, the GDP is expected to be negative on Friday, and that's keeping the Kiwi under pressure. But it does remain in a longer-term downtrend from a double top near 82 at the beginning of the year. That's expected to continue, and a move back to about 73.85 in the lows set in January is likely in the coming sessions as the economy continues to deteriorate. Last night we had a 17-year low in consumer confidence. And finally, this is helping contain Kiwi yen. So Kiwi yen hasn't performed like, let's say, Euro yen and Aussie yen because of the Kiwi performance. So for now, Kiwi yen is capped around 83 but supported around 78 cents with, I think, a bias towards the downside when the economy slows enough to start to signal that the RBNZ will seriously consider cutting rates.
Okay, Rhonda, thank you very much for joining us ahead of the Fed rate decision, and thank you very much for your insight. This has been your Forex Market Buzz with Rhonda Staskow, Regional Director of FX for the Americas at Thomson Reuters. I'm Remy Hokie. Join us later this afternoon, 4 p.m. exchange, right here on ForexTV.com.